and gentlemen, good day and welcome to Ajmera Realty and Infra India Limited Q4 and FY24 earnings conference call. Please note all the participant lines will be in the listen-only mode and one can ask questions only after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisor. Thank you and over to you, sir.
Thank you, Steve. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorem Advisor. We represent the investor relations of Ajmera Realty Infra India Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter of financial year 2024. Please note that the operational updates of the quarter have already been shared in the second week of April 2024. The investor presentations and the press release based on the financial results adopted by the board have also been uploaded on the stock exchange as well as the website and can be downloaded from the company website as well. Please note that some of the statements in today's discussion may be forward-looking in nature, reflecting the company's outlook and may involve certain risks and uncertainties that the company may face. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We first have with us Mr. Dhaval Ajmera, Director, and Mr. Nitin Bhavisi, Chief Financial Officer. Without any further delay, I request Mr. Dhaval Ajmera to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. A very good morning to each and every one of you. I hope you are doing well. And thank you for joining us today for our earnings call. I will begin the discussion by sharing the overall macroeconomics and sector updates. We all know that in 2023, India has sustained its standing as the fastest growing economy with a stable interest outlook at the end of 2023. On this, the Indian residential market continued to be on a very strong recovery path since the pandemic, and with a positive buying sentiment and the support of economic environment, I think the real estate market all across India has been in a very good state and a buoyant position where sales have been positively happening all across. Sales volume in primary markets have grown at an extremely healthy rate since 2020. And it has culminated into a 10-year high in the calendar year 2023. The last quarter, Mumbai has witnessed the highest sales volume and year-on-year growth all across the Indian metros. The need for larger living spaces and upgraded lifestyle, which was sparked during the pandemic, continues to fuel the demand across India. With strong demand all across and with the strong demand which is there, the future seems to be very positive, bright for established real estate players like us. On the back of these encouraging macroeconomic conditions, I'm elated to inform that we have delivered a robust performance during the FY24, crossing our major milestone of about 1,000+ crores in sales revenue, in sales advances. Total revenue of 700+ crores and a PAT of 100+ crores. FY24 has been an exciting year for us, wherein all our projects performed well, obviously clocking the first 4-digit sales figure. Our flagship Ajmera Manhattan project, which is in Wadala, has seen about a 76% sales already happening in that project. Whereas I'm very proud to say we are currently just above the podium parking levels on the E-deck level, and we still have about 35 to 36 floors to complete. We also launched Greenfinity in the next quarter, next phase during this quarter, and have sold about 19% of its inventory, 19, and the project is currently at the excavation stage. Our project at Ghatkopar, which is a premium residence project, Ajmera Eden, has sold more than 50% of its inventory during the first year of its launch and is advancing steadily towards in terms of construction. Ajmera Prive, our project in Juhu, has also seen a great sales as compared to the micro market over here, where we have sold about 38% of its inventory, and we are we've just completed the superstructure. So usually the sales begin for projects like this now after the superstructure is completed, but we've already sold about 38% in this project. Moving on to our Bangalore projects, Ajmera, Lugano and Florenza, which is in North Bangalore, which is about 85% sold and is under fast track execution. All the above projects we aim to deliver before the committed RERA timeline. Looking ahead, we are very confident that we are achieving and are on our path to achieve our strategic vision of 5x. This year is also looking very, very exciting for us the coming year. We are about to launch about 8 projects with a total GDV of about 4,500 plus crores, with a total development of about 1.9 million square feet. I'm very happy to say that on the back of a profound sales of Ajmera Manhattan, we are also adding in our existing new launches a new phase of Wadala, which will have a GDV of about 1,500 crores. We also have further guided that we are also looking at our project expansions and portfolio expansions, wherein we are under advanced talks to a lot of projects, and hopefully that should materialize during this financial year, the coming financial year. And we are looking to add about 3,000 to 3,500 crores of projects in our pipeline from what we are already having. Moreover, our target to ensure with all these committed projects and the launches, we want to keep our debt at a manageable level, and currently we are also looking at reducing our debt to equity ratio, and our target is to bring this to 0.8x by the end of this fiscal year. In all of these projects, launches and the expansions, we are looking at a guidance of about 33% to 35% growth in our pre-sales figure from what we did this year, where we are aiming between 1,350 plus crores in this financial year 25. This year is looking as exciting as what the last year was, and we as a company are really gaining forward to see that we achieve our vision of 5x in a quicker and a faster way. At this note, I would now like to hand over this conference to our CFO, Mr. Nitin Bhavasi, who will take you through the performance highlights. Thank you.
Thank you, everybody, and very warm welcome and very good morning to you all. Before we move on to the Q&A session, allow me to summarize the compelling operational and financial performance we have delivered for the quarter and as well the entire financial year FY24. Starting with operational performance for the quarter, our sales grew almost double, precisely 104% on YOY basis to 287 crore, and our sales area witnessed 64% YOY growth, reaching 113,000 plus square feet on carpet basis. Our collection grew almost double, precisely 91% YOY to reach to 197 crore. On the financial highlights, the revenue grew by phenomenal 99% to 234 crore. EBITDA stood at 69 crore, which is also a 98% YOY growth, and PAT stood at 29 crore, which is also a 90% YOY growth. Coming to our performance for the entire financial year FY24, our sales value crossed the mark of, in the history, in revenue recognition, and, we have achieved the pre-sales on the back of pre-sales of 1,017 crore and the pre-sale area of 4,73,000 square feet. The collection stood at 570 crore and revenue stood at 708 crore, representing 61% YOY increase. EBITDA stood at 209 crore, which is 56% YOY increase, which is having the EBITDA margin of 30%. And PAT stood at 103 crore, witnessing 44% YOY growth, resulting the PAT margin of 15%. I'm pleased to inform that despite aggressive business development activities, our debt remains stable at 780 crore, improving the debt equity ratio below 1x benchmark and precisely at 0.9x to equity. The weighted average cost of the debt remains stable and below 12%. With our OC received and ongoing project portfolio, we have a revenue visibility of 1,860 crores from our ongoing projects, and we are expecting 4,570 crores of the launch pipeline, and that is going to deepen further the revenue visibility to totaling to 6,400 crores. The estimated net cash flow from OC received and ongoing portfolio is estimated to be 750 crore. With this concise summary of our business and financial performance, I invite the question and answers and further interactions from you all. Thank you, everybody.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav Manohar from Robo Capital. Please go ahead.
Yeah, hi sir. First of all, congratulations on good set of numbers. So I have a couple of questions. First being, if you could provide any guidance on reported revenue and EBITDA margins for 25 and 26, FY25-26, and also it was regarding Manhattan project. So when will it launch, and some details about it.
So as regards to the guidance on revenue, we have given the entire visibility of our revenue potential, 116 crore from the OC received project and about 1,750 crore from the other ongoing project. So the entire portfolio, the existing portfolio, is expected to generate revenue of about 1,800 plus crores. Plus the launch pipeline, which is 1.9 million square feet, having a GDV of 4,500 crore plus, which has the further going to add on to this 1,800. So summing up both the things, it is 6,400 crore plus. And if I have to give you the indication about the timeline, on an average basis of about 4 years of the life cycle of these projects, I'm talking on the average basis. So maybe about 1,500 plus crores of the revenue on a year-on-year basis over this project. And this is the only finite projects portfolio which we are talking on to this revenue visibility. There could be a possibility that when we are doing the business development activities, further few add-on projects will be further help to accelerate this number.
As far as the Manhattan new project is concerned, it is going to be on the lines or a little more on what we've already launched, because we had a great run of the sales in this project. The approvals and the planning has already the planning of the same has already been started. We should be very soon submitting the same to the authorities for approval. Our estimate is that towards the last quarter of FY25, we should be able to launch this.
Okay, great. And if you could provide on the EBITDA margins as well. Thanks.
So as regards the margin, the composition of the project definitely drive the year-on-year margin, but however the EBITDA margin should be in the range of 30% or 30% plus kind of a thing, as we are maintaining the stable margin out of the portfolio.
Okay, great. Thanks a lot, and all the best for the future, sir. Bye.
Thank you.
Thank you. Participants who wish to ask question may please press star and 1 at this time. The next question is from the line of Pankaj Tana from LimitedInvestment. Please go ahead. Pankaj, your line has been unmuted. Please go ahead with your question. Mr. Pankaj, your line has been unmuted. Please go ahead with the question. I would request participants to please press star and 1 to ask question. Thank you. The next question is from the line of Bharat Seth from Quest Investment. Please go ahead.
Hi, Devalbhai. Congratulations on good set of numbers. One bookkeeping, how much a project we launch in 24?
So, good morning, Bharatbhai. We are, as I said, we are looking at 8 projects to be launched in FY24. We had about 6 to 7 projects where we are going to launch in different parts. Primarily, most of them are in Mumbai, and the other 1 or 2 in Bangalore.
I'm asking in FY24, this is you are talking of launch to be in during FY25. Is that correct understanding?
So, Bharatbhai, yes, I read your question. FY24 you are asking, and the 2 projects which we have launched, Eden during the start of the financial year F24, and which is at Pantnagar, and Greenfinity A and B, the next phase of Greenfinity, which is in the last quarter of FY24. These are the 2 projects which we launched in FY24.
What was the GDV of these 2 projects?
So, the GDV is about 500 crores for both the projects together.
So now coming to this, Devalbhai, what specific, we are expecting to launch 4,500 crore.
Your voice is very low, sir. That is why there was some confusion.
Hello, is now clear?
Still lower, but please go ahead.
Yeah. Sir, I just want to understand this. We are going to launch a GDV of 4,500 crore in FY25, but I mean we are targeting only say around 1,400 crore kind of a pre-sales, including inventory we have. So this number, don't you think is little conservative in the kind of market that we are seeing?
Well, yes, you are right, but the thing is the timing of these launches versus the sales we also need to see. So the thing is there are a lot of projects of these 8 where a lot of them, majority are coming towards the last quarter of the FY25, and then to achieve those kind of numbers, like let's say our target is that whenever we launch, we don't launch the entire phase of the project, right? There will be usually it's about 60% of the phase of the total value of the project is what we launch, and in that we target to have at least 30 to 35% sales. So on an average basis, when we launch, we are looking at 20-25% of the total inventory to be sold in the first 3 to 4 months or 5 months of the launch of the project. Now the timing of these projects is going to be anywhere between November to March. So some will be now, some will be earlier, some will be towards August, some will be November, and majority of the larger ones are going to be between Jan to March. So to capture that entire figure of in a larger way is going to be difficult, and hence looking all the permutation combination, we've given a guidance of 1,350 to 1,400 crores.
Fair, I understand that, sir. It's a great. And sir, now can you give a little more color on the?
Sorry to interrupt, sir. Mr. Bharat, could you please use your handset while asking?
I'm using my handset only. I don't know exactly.
Yeah,
is it better now?
Much better.
Okay. So, to understand on business development side, how much business development pipeline, and how do we see again redevelopment side? So, some of the concessions which were given earlier, that was encouraging for particularly cluster development. So how do we see with that perspective?
So, business development is going in a very, very strong way. In Mumbai per se, redevelopment and cluster redevelopment, slum redevelopment, MHADA redevelopment are the need of the hour and the game of the hour. Now, society, slum dwellers, even the cluster people, all of them prefer to have larger branded developers coming and doing their development because A, they are convinced with the kind of project quality, B, they are convinced with the kind of timeline. We are also in getting a lot of inquiries and under discussions with many projects and many societies. Obviously, the competition is stiff. People are bidding, but we at certain times ensure that we do not overwhelm ourselves or over-leverage with thin margins, but we try to get the best projects which gives us a good visibility and a better margin is where we try to focus ourselves. So there is a good supply or good demand coming. People are looking for redevelopments now. And wherever we feel the margins are good, we are safer, and even though being a little more conservative as compared to probably others, if we get at our percentages and margins, we probably grab those projects.
Okay. Great answer. Thank you and all the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Faisal Zubair from HG Hawa and Company. Please go ahead.
Good morning. Am I audible?
Yeah.
Congratulations for the good set of numbers. My question was connected to the redevelopment projects. Like how many redevelopment projects is the company considering in the FY25 and 26?
So as of now, we have we've got about 3 to 4 redevelopment projects which we have either started executing or we have signed the DA or finalized the term sheets and everything. In FY25 and 26, we are looking at least to it's very difficult to say a number, but we are aiming at least to have at least 7-8 more projects coming in. But this is our aim and this is our target. Obviously, there is a lot of competition which already goes in, and with the set of numbers where we see, if the proposals are viable, we definitely aiming at looking 7-8 projects minimum adding in this 2 years.
And so connected to this question, the 3-4 redevelopment and projects which are under consideration, like what is the total square feet that you are preparing?
So overall, it's about 2.5 lakh square feet, which are carpet area, which I'm talking. One is in Versova, one is in Juhu, one is in Yoginagar, in Borivali. These are the projects where we've already either signed up or being under construction. So these are the projects where we are currently signed up and done.
Okay, thank you.
Thank you. The next question is from the line of Jayant Kumar, an individual investor. Please go ahead.
Hi, good morning, everyone. First of all, congratulations on amazing operating performance. I had a specific, question on, the Concall financial summary that has been presented in the reports, where there has been a substantial reduction in your, non-current assets by way of reductions in maybe loans and advances. So maybe can you just explain that and how are you seeing these numbers pan out in the maybe FY25?
Great. So more of a granular details. Yes, the loans and advances number has come down by about 200 crores. And this is due to the, as the, utility and the objectives of such advances, precisely 3 positions. One, where the reclassification because of the, loans and advances utility achieved. So it has gone to investments. One more has gone to the deposits for the project, and one particular for the inventory asset. So these are the 3 positions which have culminated into reduction of this particular number, and the balance of the money has been come back on the operations as such. And this is typically the business model of ours, like, for any acquisition or any business development activities, we utilize this modus operandi through advances, create our rights, and there is the, acquisitions or, business development activity, and having there is position, then only this particular on a definitive documentation, it will come back to as a, investments or the inventory or to the business deposits, project deposits I refer to.
So if I understand this correctly, the position from loans has either moved to some form of business or has culminated into investments that will throw revenue for the company in the years to come.
Absolutely right.
Thank you. Thank you.
Thank you.
I just have a one question. While you've discussed a lot about sales and revenue projections, but how are you seeing on-ground conversations? Because we're seeing most of real estate companies present, very strong sales, give guidance on good sales numbers. But because you're operating in a plethora of, or very wide spectrum across the product mix, how are you seeing conversations, say, for a high-end project like maybe something in Juhu, in Mumbai, as against maybe a mid-segment project in Bangalore? So how are you seeing those conversations pan out?
So, if you really look at, the way sales are happening, just to give you an example of Juhu, as I said, usually in the earlier days and when we actually took up the project in a micro market like Juhu, where the project is a little high-end, usually these sales are happening towards the completion of the project or once the project is completed. But if you really look at it, we've already sold about 38 to 40% of our inventory in this project. So this shows that people are ready to take the plunge. And similarly, for projects like Bangalore, which is an affordable or a mid-affordable segment, I think there also run rate is pretty good, and people are leaping and taking the jump ahead in terms of, taking decisions. Primarily more on the brand of the project or the developer. And secondly, also is the timelines what these projects offer. So if it matches the timeline and if they are confident with the brand with which the project is being delivered or being executed, I think they are ready to take these decisions. And the primest example you can see is Ajmera Manhattan, where we are just under we just finished the podiums, I would say, of the project, and we still have 35 or 36 floors to go, which is another 2.5, 3 years of development to happen, and we've sold 76% of its inventory.
Thank you. That's it from me.
Thank you. A reminder to all participants that you may press star and 1 to ask questions. The next question is from the line of Rahul Soni from ICICI Bank Limited. Please go ahead.
Hello. Am I audible?
Yeah.
Yes, sir. Just two questions on this redevelopment side. So, according to you, sir, what are the criteria which you see to consider a building or a project for redevelopment so as you can make your target margins?
Okay. All right. So usually when we look at redevelopment projects, we are obviously the location of the society matters a lot to us. Number two is when we look at these projects, we want to see to it that we minimum try and make about 20-25% of the margins, because if that's not the case, then we usually don't take up these projects. So that's how we categorize or probably shortlist those projects. Obviously, there are many and more societies which come in for today for redevelopment. We put in those bids and offers with our comfort and margins, and then if it is available to us at that range, then we move ahead. Otherwise, we are okay to leave the project.
And what is the incremental FSI do you see?
So, usually these projects are built on 1 or 1.5 times the land area as an FSI, if I have to say. So if, let's say, 1,000 square feet is the land, they would have developed 1,000 or 1,500 square feet. The incremental what we are looking at is anywhere between 3 to 5.
3 to 5 times. Okay.
Yeah.
Okay, just one more question. So, sir, in Mumbai, is there any minimum age criteria for a building to go under redevelopment?
If it is private, then there is no criteria. But if it is, if it's like say a MADA society or a cluster redevelopment, which is like, maybe a cluster of societies coming together and all of that, then it is a 30-year criteria. And usually people try and do redevelopment once the building is probably 40, 50 years old.
Okay, thank you, sir.
Thank you. The next question is from the line of Rahul Cecil Chako, an individual investor. Please go ahead.
Hello. Hello.
Hi.
Good morning, sir. Am I audible?
Yes.
Yeah. Thank you, sir. Sir, my first question is regarding your new development. You have mentioned you are going to acquire a 3,500 crore project in current financial year. And sir, recently we saw trends like, and specific for MMR, nuclear are going for the redevelopment project more aggressively. So could you please give me any guidance how much of this 3,500 crore we can assume you will acquire from the redevelopment project? And the second question on same line regarding the margin. So what's the margin difference between the project you are doing for the redevelopment and the own project, sir?
So, look, these are all projects which are either some form of redevelopment. Either it can be slum, it can be MADA, it can be society. We are in talks with at least 6 to 7 projects, and where obviously the GDV is way more higher than 3,500 of these 6-7 projects. But on a conservative side, we feel that maybe 2-3 will click out of this, and then we will probably sign. Although all are on very advanced stages, so hence we've given a guidance. So to bifurcate how much of that is from society or a slum is little difficult right now, because it's all mixed bag right now of all. As far as margins are concerned, we usually look at projects in different schemes. Whenever it is a slum, it is usually around 18 to 22%. If it is society, it is about 25 to 35%. MADA redevelopment is about 30-35%. So that's where we range. And if it is our own land, then it is about 40-50%.
Okay, great, sir. And sir, next question is regarding the competition side. So actually, recently we saw a trend that new players also entering into MMR region very aggressively. So are you facing any competition in terms of the new player who are entering into MMR region, or specific for your particular region where you are operating?
So see, competition is the name of the game. I mean, we can't hide beyond it, or we can't be shy away from it. People are entering, market is good, so obviously many new players are coming in, and which is good for the market. But most importantly, it is, for us, we are not too worried, is primarily because we see that today, in spite of there being competition, there has been enough and good demand for established players, and with our experience and our deliveries of 55 years and 45,000 plus apartments, people prefer to deal with us in terms of these redevelopments and societies. And plus our existing projects are also a testimony, with the sales of our existing projects are testimony of the brand which it holds. And that's where we continue to grow aggressively in all these micro markets in spite of competition.
Okay. And great. And sir, just last question. In terms of the realization, so what kind of a realization are you saying in specific for MMR and Bangalore market, sir?
So typically, 1,000 crore of sales and having on the 4 lakh plus square feet kind of a thing. So on an average, we have about 19K as the per square feet realization on a portfolio level basis. In terms of the micro market where we have been operating, like Mumbai market and as well the Bangalore. So definitely Bangalore being a volume market, so always been a product range of about 6,000 to 8,000 or even 9,000 kind of a price point on the carpet basis. In Mumbai market, we are spending on a very different micro markets, right from our own land at Wadala to, the Juhu or to the Pantnagar Eden project, Greenfinities, which is another affordable product at Wadala kind of a thing. So it has a different price points for this variety of the projects.
Okay, understood. Thanks, sir. Thanks for the question.
Thank you.
Thank you. The next question is from the line of Rakesh Vyas from Quest Investment. Please go ahead.
Yeah, hi. Congratulations, team, on good set of numbers. Am I audible? Hello?
Yes, sir.
Yeah. So few questions from my side. First, can you just highlight as to on the like-for-like basis in last year, what would have been the price increases that would have taken across the projects, and how that would impact our margins compared to how the project was underwritten, if there is?
So in terms of the margin, we are at a stable, the EBITDA almost at 30, and as well on the PAT basis almost at a 15 to 16%. Last year precisely we were at 16, and due to the revenue composition we are at 15% precisely in this financial year. So like to like we are on the stable margin regime kind of a thing. In terms of the, I would say price point kind of a thing, it is marginally up, to give you a very significant sales contribution from the Manhattan. Last year, FY23, on average basis, we had Manhattan had a 28,500 plus on a carpet basis, which is moved up to 31,100 on FY24 basis. And so is the case with the rest of the, portfolio projects kind of a thing.
Got it. So on an average, close to 10% price increase that we have seen. Great.
It is 28,500 to 31,100 for Manhattan kind of a thing.
Yeah, sure. Second question is around the capital that we would have earmarked for our business development opportunity going forward. So this 3,500 crore of BD that we have planned, how much is the expected capital deployment there?
So this is the, few advanced stage positions which we are, going to shortlist, and this is the capital requirement, location, and so many other factors. We will shortlist and come back with the precise information when we do the project announcements.
Got it. And my last question is around visibility beyond FY25 in terms of our launch pipeline. So in next 24 months from here on, what would be the total GDV that we would plan to have launch? 4,000 crore is for next year, but I'm just trying to understand better how things look like for FY26 as well.
So as you know that, we have rather a good revenue visibility of about 6,500 crores. So that is giving us a good headroom for the, growth to undertake on a, from the revenue of 700 which we have clocked in this financial year. And plus this is only on the finite projects. Plus there is going to be where we have given the guidance of 3,500 worth of the projects which we are going to acquire and make the depth of the launch pipeline further deeper kind of a thing. So that business development activity will be an ongoing one, and we will definitely on a time-to-time basis come back and announce the projects on its materiality.
So just for clarity, this 3,500 crore BD will actually over once you acquire these projects, 12 months or so, will turn it around into a launch number broadly. But what would be the expected launches from the book that we already own in terms of our overall pipeline generally beyond this 4,000 crore that we have planned? I was just thinking about those numbers.
So
will existing book deliver another 4,000 crore plus kind of launch pipeline potential in FY26 as well?
So I'll just give you a brief guidelines with our existing portfolio and existing land banks. That is Wadala, Kanjurmarg and other places. We have about 12 million square feet of carpet area to be launched in this, and those don't contribute or are not part of these the 6,000 crore projects what we have already announced. So these projects, which is 12 million square feet, will eventually start coming in the portfolio over the next 2-3 years or 4 years and year on year over the next few years. So definitely what we are looking at a larger number beyond this 4,500-5,000 crores coming on, and our endeavor is to see that at least we launch from our existing projects in the coming financial years and the coming years, at least 3,000-4,000 crores from these existing plus the new ones what we acquire.
That is very clear, sir. That is very clear. Thank you so much, and those were my questions. And I concur with one of the arguments that came through that your pre-sales guidance seems to be slightly more conservative, and I hope for the best. Thanks.
Thank you.
Thank you. The next question is from the line of Pankaj Tana from Varun Investments. Please go ahead.
Hi, good morning. Pankaj here. Congrats on the lovely numbers. I just wanted one guidance on what is the status on Kanjurmarg.
Well, Kanjurmarg is under track. Things are working well. We are already doing the preparations for it. And we should be able to give you an announcement very soon.
Okay, no, because it's not there in the announcement list, and I passed that place going to the college there, and I've seen the boards coming up over there, opposite NITCO.
So that's the whole idea. When we launch a project or we are about to launch a project, we put up our boards. So that's our sign of launching, and definitely we are going to launch one of the phases this financial year, and we are working on the same, and hopefully we should be giving a good announcement soon.
Okay, I was getting confused whether this is Bhandup or whether this is Kanjur separate.
No, Bhandup is separate and Kanjurmarg is separate. Bhandup is something which we've just started doing the pre-launch, and by June we should be able to officially launch this project.
Okay. So you'll be doing Kanjur again in phases only, right?
Yeah, of course.
Okay. And, well, I think that's about it. I mean, all the best. Thanks very much.
Thank you. Participants are requested to please press star and 1 to ask a question. The next question is from the line of Faisal Zubair from Hawa and Company. Please go ahead.
Hello.
Yeah.
Yeah, my question was with respect to what is the minimum required area for going for cluster redevelopment?
It's about 4,000 square meters of land.
4,000 square meters?
Yeah.
And as you mentioned, about the redevelopment projects which are already under process about Versova, Juhu and Yoginagar, you said 2.5 lakh square feet you are preparing. I wanted to get some little elaboration about what is the rehab component, what is the saleable component.
So this what we are talking is all our sale component. Rehab is over and above this.
2.5 lakh is the sale component?
Yes.
Thank you, sir.
Thank you. As there are no further questions, I now hand the conference over to Mr. Dhaval Ajmera for closing comments.
Thank you very much, each and every one of you, for being part of our conference. As the year goes by, we are looking very exciting with the coming financial year, and we are looking at great launches and great values. We just hope the real estate market continues to grow, and we are very confident that it will continue to grow. On this occasion of Akshaya Tritiya today, we wish you all a good luck, and we just hope that the good luck continues in all our favors, and the market is looking buoyant. And thank you once again for connecting with us. We look forward for our next earnings call coming with you soon. Thank you. Have a great day.
On behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Bye-bye.